Let's get straight into it because, as I say, we've had this confidence index rise from 23 to 29 in the fourth quarter. And although this is the highest level that we've seen in a year, still on average, 7 out of 10 respondents in different sectors of this building industry continue to be, in very cautious and unsatisfactory, holding unsatisfactory sentiment right now. So what's your reading of the headline number?
That's quite correct what you've said, and it is especially the contractors that are the most negative still. I mean, only 14 out of 100 non-residential contractors indicating confidence, and even only 22 out of 100 residential contractors. Those are still very low numbers. But where we have seen the improvement, and very substantial improvement, is among the building material retailers, which have jumped 32 points to just short of 50. That is a very encouraging number and suggests that there is a lot of maintenance starting to happen. Obviously, a lot of people have held back in recent years, but you can only hold maintenance back so far. So that is now starting to connect, and the manufacturers of building materials obviously then also benefiting, but they have only recovered still to a very low point of 12. So although they have picked up from nearly nothing to 12, there is still a lot more to go there to really make a difference.
And that contributing to this discrepancy we're seeing on the residential side of things versus the non-residential side of things. To what extent did it come as a surprise to you, this discrepancy that's emerged? Because in recent times, the non-residential sector has outperformed the residential sector.
Yeah, we don't know whether we just have one data point in this particular quarter, in the fourth quarter. We find, as you say, that the residential has picked up slightly, while in fact the non-residential has pulled back. And there is evidence of some increased activity among the residential building contractors. But it has to be seen in coming quarters whether that is sustained. Compared then to the non-residential seemingly struggling at this point in time. But as you say, in previous quarters we have noticed that there was in fact more activity taking place among the non-residentials. They have the benefit of private sector work in terms of refitting office buildings, in terms of upgrades, and also building shopping centres, especially in the non-metropolitan areas. While on the public sector side they have the benefit of the hospital and school building program, at least in some provinces. So it came as a bit of a surprise for us to see that the non-residential pulled back in this particular quarter. But it may just be that certain projects all simultaneously came to an end, and under these circumstances there's a bit of a vacuum. But we have to then see in coming quarters whether this condition continues, persists, compared to the previous trend reasserts itself, and the non-residential should actually be doing better at this point in time. And we're saying that because on the residential you have this problem of oversupply, especially houses of 500,000 rand and more. And of course credit remains very tight. Yesterday the credit numbers came out again for October, and it remains only about 5.5% growth, which is half nominal GDP growth, an indication that credit is not recovering very quickly, and residential property is the main exposed to that particular condition.
What's the status on tendering competition? Because we know that that was sitting pretty elevated at a point. So is that still sitting high?
Well, tendering eased for residential contractors. But for non-residential contractors, it remained the same at very fierce levels, as we understand it. So that reflects the changes in the confidence levels that we mentioned earlier.
Let's take a look at this, the kind of uptick we've seen in the retail segment, because interestingly, we've had the report highlighting that surviving retailers have benefited from the fact that some of their competitors went out of business over the last year or so. So to what extent is that a factor that's really coming to bear here? Yeah,
but that is always normal at this point in time, and that's why we emphasized it. In other words, the cyclical turn may initially be a reflection of the fact that some people have fallen out, and that the survivors indicate that they are surviving, and that they are the first ones to indicate a positive response. But that is nothing unique at this time of the cycle. So I would not want to overinterpret that aspect, but we mention it from a statistical point of view that these things do happen. For us, the data so far suggests that there is a cyclical turn of some kind taking place. It is unevenly taking place, It seems to be mainly favoring the building merchants at this point in time. But it is encouraging also, by the way, on the architects and quantity surveyor side, that we see the contracts awarded, in other words, from the sketch stage to the working drawing stage to the contracts being awarded. That is progressing, that's improving, and that is promising for the non-residential side. So there is some evidence both on the residential and then hopefully looking forward for the non-residential that there is better activity levels ahead.
To what extent, you know, you talk about benefiting the building merchant side of things. To what extent does it translate to their ability to raise selling prices to make up for the higher cost outlays that business, generally speaking, is experiencing right now?
The BER does a manufacturing survey, and the building material manufacturers participating in that survey have basically indicated that so far they have not had an ability to raise their final prices relative to the cost increases that they're experiencing. So essentially their ability to improve their profits is still constrained. So that ability is not there yet, and the fact that only 12 out of 100 manufacturers of building materials are indicating confidence at this point tells you just how constrained the system really still is.
So where we've got an eye on sustainability of the kind of trends we're seeing right now, what's your outlook moving into 2012 and as we move into the first quarter most specifically?
I find the signals out of the building material merchants very important in that the retail sector is moving. People are committing themselves to maintenance and to doing new buildings. But then also it is at the architect and quantity surveyor level where we see improved contracts being awarded, which is a positive signal for the non-residential side. So 2012 should be a better year than 2011, and the index is giving that hint that it wants to turn, and it has to be seen in coming quarters that in fact that is being sustained. Obviously the levels of interest rates should be supportive. And then also the economy is not standing still. The economy continues to grow even though it is modest growth. So under those circumstances the worst point in the industry should be behind us, but you don't hear us say that it is a fast or a rapid or a steep improvement that lies just around the corner. It is not that kind of reality.